Hello and welcome back to Dukascopy TV. Now, as I'm sure you're aware, banks in Spain at the moment aren't faring too well. In fact, only last week, Moody's decided to downgrade 16 of them, including their fourth biggest bank, Bankia, which has seen its shares drop by over 27%. Well, joining me in the studio is Francois Nordhof, the Chief Investment Advisor at BCP. Francois, thanks very much for coming in the studio. If we could just start with Spain generally at the moment. We've seen that their GDP is dropped by 0.3% in the first quarter of this year. Before we move on to talking about the banks, can you talk a little bit more about the current situation in Spain?
Yes, as you know, Spain is penalized by the huge indebtedness of the actors of the Spanish economy. Roughly the outstanding debt amount, not only the state debt that is representing roughly 80% of the GDP, but also the private owned debt owned by households, private households, but also by corporations or financial institutions, is representing roughly 400% of the GDP, of the annual GDP.
Now, I mean, I mentioned obviously Bankia in the introduction. I mean, last week the shares had dropped by 27%, but in total it's dropped by some 70%, I think, in total. We know that there's almost 500,000 investors at Bankia. This has been obviously an amalgamation by 7 of the savings banks. What's the current situation though with Bankia? Because obviously that's fairly alarming, if the fact that they've lost 70% of their share price.
Exactly. Well, even in the intraday it rebounded some 30%, so it's extremely volatile. I mean, it's showing just the risk that investors are facing having an investment in Bankia. Currently, what we can say, the situation is not completely transparent. You know, Bankia has been nationalized. The intention of the authorities was actually not to nationalize immediately Bankia. It was to allow them a credit line of roughly 4.5 billion euro, and to say, we give you a state guarantee or a credit line of 4.5 billion, you pay a huge interest on it, and you have a fixed tenor, a fixed maturity. And in fact, after running over the books, the authorities get the impression that Bankia will never be able to redeem the credit line and to pay the interest rate. Therefore, for them, it became an evident to nationalize the bank. And they nationalized the bank in an overnight exercise. The problem is that even or despite this nationalization, clients of Bankia continue to withdraw their money. We do not exactly know how many deposits were withdrawn. It's probably not the same amount than the one that happened in Greece, because the situation is different in Spain than Greece. But overall, there is a systemic risk. There is a systemic risk for Bankia, and Bankia itself is an actor or a bank institute that could put within a domino impact other banks into troubles.
If looking to the future then, I mean, if we were to look at, say, with the transparency in mind and say some of the other banks like Bankia and Santander moving forward now, you know, some people are saying that Spain could potentially follow Greece. If Greece did leave the euro, for instance, they could say perhaps it might be like a domino effect. Where do you think Spanish banks need to go from here?
Yeah, well, clearly, at first there are also introduction of new banking rules like Basel III, and those capital ratios currently are not reached by most smaller bank institutions in Spain. The three big ones, the well-known BBVA and Santander and Bankinter, there is more or less little risk that they do not reach the required rate of capital. The problem is really on the regional banks, mortgage banks. There is the problem. The effect of a domino, as those banks are maybe systemic on a regional basis, but not systemic risk on a European basis, is relatively subdued. Therefore, I would say there is the main decision that have to be taken on a national basis at first, before taken on a European basis. Have a look, for instance, in Ireland, real estate prices went down since the top of 2007, more or less 50-55%. Now, in Spain, it's not the case. In Spain, real estate prices declined only by 30%. But we know that there is an excess capacity of real estate. In peripheral places, you need to have really a cleanup of the mortgage portfolio, and therefore you need to adapt the prices and to agree that real estate prices decline not only by 30%, but an additional 20% have to decline. And therefore, this is probably to require from the authorities that this external audit is going to put pressure on the banks in terms of how are they going to evaluate their real estate portfolios.
Thanks very much, Francois, for coming in the studio. Fascinating insight there on Spanish banks. That's all we've got time for here on Dukascopy TV. Stay with us, though, as we'll be bringing you a combined interview with La Jeffrey later on. But until then, goodbye.